Speaking at the Public Interest South Africa's annual Whistleblower Summit in Johannesburg, the gathering of whistleblowers, policymakers, media, civil society experts aims to shift societal norms towards transparency and accountability in the public and private sectors. The Deputy Minister Nel also emphasized the need to support Chapter 9's institution to scale up the fight against corruption and to protect whistleblowers.
And so in that regard, we liaise very closely with the public protector. We are constitutionally obliged and we do support the work. I'm very happy to indicate that at a time of financial and fiscal constraint, the public protector is one of those institutions whose budget has continued to grow in recognition for the very, very important role that they play.
Judgment has been reserved in the leave to appeal application in Nigerian televangelist Timothy Omotoso's rape case, sitting in the Gqeberha High Court in South Africa's Eastern Cape province. The National Prosecuting Authority has argued that whether or not their case will be successful in the Supreme Court should not play a factor in Judge Imbra Skuman's allowing them to take the matter up to a higher court. Omotoso's lawyer Peter Duberman argued that there has to be a reasonable prospect of success in order for the applicants to be granted the appeal, and that the NPA failed to meet the jurisdictional requirements of Section 319. NPA spokesperson Luxolo Tyali says they are committed to bringing justice to the victims.
As the NPA, we remain committed to ensuring that the victims of these crimes do find justice. For that, we are willing to take the matter to the highest court in the land because we believe that the outcomes of this case have far-reaching implications on the criminal justice system. Because here we have an issue where we believe that crucial evidence was never considered.
A G20 meeting looking at food and lost waste prevention in sub-Saharan Africa has revealed that approximately 10.3 million tons of edible food in South Africa does not reach the human stomach. That's 34% of all food in South Africa. The country hosted the 9th regional workshop on the matter in Pretoria. It was a strategic session led by the governments of Germany, New Zealand and South Africa, sharing insight to promote food security and to combat waste. Lastly, the head of the United Nations has called for an immediate end to the violence in Myanmar and said its military rulers must find a credible path back to civilian government. Speaking on the sidelines of the Asian summit in Malaysia, Antonio Guterres said he was appalled by the situation in Myanmar.
The military takeover in 2021 has piled calamity upon calamity. Villages bombed or burned, thousands killed, millions displaced, regional stability at risk. A military attacking the civilians it's meant to protect. And now the spectre of elections within an active conflict. The atrocities and the cycle of impunity must end.
Recapping on your top stories, the Constitutional Council has announced President Paul Biya has won an 8th term at the age of 92. Paul Biya becomes the world's oldest president, winning with a 53.66% share of the vote. Channel Africa News, I'm Onele Nsinsi.
SABC News, independent and impartial.
From an African perspective.
And coming up in your sports news this hour, the NBA will soon be selling franchises for its league in Africa, while Yannick Sinner hits $50 million in prize money after winning the Vienna Open title over the weekend. Details coming up at 4:30.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It's 9 minutes after 4 p.m. Central African time. A very good afternoon to you, Africa. Here's what we've got in store for you today on the Monday edition of Africa in Business. We'll take a look at developments in Malawi with President Peter Mutharika imposing a ban on the export of raw minerals. We'll be speaking this afternoon to Dr. Bertha Bangara Chikadza, a macroeconomist and economics lecturer at the Malawi University of Science and Technology. Also, MultiChoice is going to be delisting from the Johannesburg Stock Exchange as well as from the A2X. This in order to make way for the listing of Canal Plus, which has now acquired a majority stake in MultiChoice. Also coming up this afternoon, we'll be taking a look at the latest on global and international markets in our FNB slot. It's 10 minutes after 4 p.m.
Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
We begin here this afternoon with a look at the Financial Action Task Force. Now, when the FATF met in Paris, the world's financial watchdog had good news for South Africa. The Financial Action Task Force, which is the global body that monitors financial integrity, has officially removed South Africa from its grey list. Experts say the decision boosts investor confidence, but they do caution that the real test lies ahead, and that is keeping the system clean, and that it is a remarkable turnaround for a country once criticized for weak action on money laundering and terror financing. Channel Africa's economics reporter Innocent Samosa has more on this story.
In a statement, South Africa's National Treasury congratulated all government departments and agencies for their collective efforts and dedication in helping the country successfully exit the FATF grey list. But what does South Africa's removal from the grey list mean for investor confidence and for the broader economic outlook in the short and medium term? Dr. Elna Moolman is the chief economist at Standard Bank South Africa.
South Africa's removal from the Financial Action Task Force, or FATF's grey list, is a very positive development. It demonstrates that South Africa is taking the global efforts to tackle money laundering and terrorism financing seriously. It also demonstrates South Africa's ability to implement policy changes. Getting off FATF's grey list required a broad range of interventions, which in turn required efforts from both the government and the private sector. It is therefore a very positive demonstration of our ability to implement policy changes and for government and the private sector to be effective in working together to tackle challenges.
Following South Africa's placement on the FATF grey list in February 2023, Dr. Moolman says the government has worked tirelessly to resolve all the shortcomings identified by FATF.
We're seeing the same success in other areas of cooperation, such as first addressing the electricity shortage and now tackling the challenges in the logistics sector. These interventions are required to attract investment and lift South Africa's economic growth rate, which will in turn reduce unemployment and help to improve government's fiscal metrics.
She says the delisting is a positive step for South Africa.
The delisting from FATF's grey list will be positive for investor sentiment and will make it easier to invest in South Africa as it reduces the due diligence requirements for many investors. On its own, however, it won't necessarily materially boost investment and growth. We need to also see progress with other reforms.
How soon can the country expect to see tangible economic benefits such as increased foreign investment, lower borrowing costs, or improved credit ratings? Makwe Maselela is the founder of Makwe Fund Managers.
But that does not guarantee that we'll immediately have the necessary investment flowing in. Remember that South Africa, unlike years back, were equally competing with other African countries. We are no longer just being seen as a stepping stone into Africa. You have investors who are directly going to specific African countries. But yes, it's good news for us that we don't have that cloud hanging over us.
Makwe says the country should put measures in place to ensure it doesn't fall back into non-compliance, especially given ongoing concerns around corruption, illicit financial flows, and governance.
And for us, we know that in the next coming 2 years or so, we will be reviewed again. So it's very important that whatever 22 actions that we have implemented, we continue to make sure that they remain in force. And where possible, we can even make it much better, because we cannot afford stuff like that, given that there are other headwinds that we have to deal with, which are totally beyond our control.
For Channel Africa News, I'm Innocent Samos in Johannesburg.
It is exactly 14 minutes after 4 p.m. Central African time. Back with more of your day's leading business stories in just a moment.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
Now, Malawi's President Peter Mutharika has imposed a ban on the export of raw minerals in an effort to ensure that the country fully benefits from its mineral wealth by processing minerals locally rather than exporting them in their raw form. Mutharika says Malawi could earn up to $500 million annually. That is, if, of course, mining operations at the Kasia Rutile site in Lilongwe and Kangagunde rare earth site in Balaka are properly developed and managed. For more on this, we joined on the line by Dr. Bertha Bangara Chikadza, a macroeconomist and economics lecturer at the Malawi University of Science and Technology. Doctor, a very good afternoon to you. Welcome to Africa in Business.
Thank you, Thami.
So the president has made the reasons why he has instituted this ban quite clear, saying that Malawi could earn up to $500 million annually if all the various mining operations and beneficiation happens according to plan, also wanting to improve the economic standing of the country. What is your take? Are these the type of steps that are needed? Are these the measures that will achieve what the president hopes to achieve?
Yes, I would say these are the measures that the government is supposed to be taking. Considering that this country has been losing a lot of minerals in form of exports, and some they go out even without being exported formally but informally. And the country has been struggling in terms of collecting revenue, in terms of employment, and even, beneficiation from those people whom these mining things are happening. People don't even benefit enough. And so we have always been lamenting about how minerals tend to be exported in the country. And I think looking at what the president stated, everybody was happy, saying, I think this is the stand that we needed, because people were just coming in, maybe mining and exporting without the country realizing the proper benefits from the minerals that we have as a country. So I think this is actually a great move for the economy in terms even of economic diversification and value addition. We are seeing this as the best opportunity that I think the country can take, so that maybe we can move from relying on agriculture only from tobacco, but also looking at mining, which can actually earn more than what tobacco tend to earn. In terms even of job creation, the mining industry has actually the potential of creating more jobs. Only that maybe with the timing, I would say it's not all that good, because we do not have the technology, we do not have everything that is needed. But I think for a start, this is a good development.
And I want to pick up on that comment you've made right now, Doctor, saying that the timing is not opportune because you don't have the technology to fulfill this. When the president says that $500 million is what could be earned annually, is this a realistic number, given the current domestic processing capabilities or lack thereof?
I think the president is just making a projection of what the country could be earning, not what can be earned now. But if everything is done properly, I think the country can benefit more. And even the revenues that we tend to worry about, we can be getting more if processing is done here. A lot of beneficiation happens, a lot of job creation is done, and so on and so forth. We can even see industrialization happening from these, and also technology transfer coming in. So I think it's something that we can benefit, but maybe in the short term, it cannot go up to that much. But gradually, we should be able to go even beyond that if we put in place the right standards and the right technology, and then we start processing properly.
And maybe let's delve into that a little bit more. The challenges that need to be addressed, you've highlighted. But what specifically needs to be put in place in order to be able to turn the raw material into meaningful value addition, as well as industrial jobs? You mentioned jobs earlier on.
So for Malawi, I think there's a lot that has to be done. because if we see our neighbors, even in South Africa, Zimbabwe, where these things were started a long time ago, there are policies in place. Illegal mining is done, yes, but probably not to the extent that it is done in Malawi. So there is a lot of illegal mining in such a way that if we could only formalize these illegal miners, the country should be exporting. We have gold, the gold tend to just disappear in Malawi. And sometimes even when it gets captured at the airport, it disappears there. So policies are important, but also implementation. And also the government needs to invest a lot because we are leaving exploration to outsiders, to investors. So the investor has the ability to say, I cannot share my data with you. So the government is in the dark as to how much is available there, how much needs to be realized, and so on and so forth. So I think needs to take a forefront, to be in the forefront in terms of investing in this mining industry. And then from there, probably raise capital even on the stock market, probably put things in place that if a company is coming in, it should own so much shares and the government should own so much shares and even the people should own so much share. And also probably we should put that line of saying we should process up to that point. In that way, we should be able to have that type I was talking about of job creation, because if we're exporting raw materials, we're even exporting the jobs. So we have a larger population which is unemployed. The youth, a larger population is even also unemployed. And if we're exporting jobs, then who is going to employ these ones? So I think it's high time we take advantage of these resources that we have and put the right places, but also implement the right places, because the right policies. We can have the policies, but if we don't have the zeal to implement them and do the things according to the way they're supposed to be done, we'll continue lamenting that, we are losing out on these just because maybe we are not doing the right thing to benefit.
And Doctor, what could be the impact that this ban will have on Malawi's foreign exchange earnings, on the country's revenue stream, as well as the export diversification strategy?
This ban doesn't have much impact per se, because if you look at the foreign exchange earnings for the country, it's the agriculture sector which is actually bringing in more, especially tobacco. And then we, also struggle with some other things that come, maybe remittances and so on and so forth. So it's not much, because even the companies which have come in, they haven't started actually exporting properly, that the country is earning anything literally. But like I said, I think most of the resources leave the country unaccounted for. We have a case, a very good case, where I think there was a case in US where a company was exporting and actually undervaluing or reporting what was being exported in very, very low amounts, only to discover that we're talking of over, billions. So this is the case in Malawi. If only we could be doing things in the proper way, then we should be able to benefit from that.
Doctor,
so what I'm saying, I think it's not like we are losing much. Probably if we put the right things in place, then we should be able to get the right forex.
As you're saying, also being at the forefront of everything from the exploration as well. Dr. Bertha Bangara Chikadza, we thank you so much for your insight this afternoon. Much appreciated, ma'am.
Thank you so much.
Thank you. Dr. Bangara Chikadza is a macroeconomist and economics lecturer at the Malawi University of Science and Technology. In just a moment, we turn our focus now on to MultiChoice and Canal Plus.
The Midnight Snack, 12 to 3 a.m.
Our fitness coach, her name is Yvonne Dimagazo Pasha. How to remain consistent with gyms, Dima, and I'm going to put you on the spot right now. As we are talking, I will send you my picture and I want you to tell me what you think I should work on. Because, when I look at myself, Dima, I think I'm very handsome. I'm so good looking, oh my goodness. Like here at Channel Africa where I work, I think I'm I'm one of the most good-looking people ever. Like, sometimes when I look at myself in the mirror, I never get used to how good I look. I'm just amazing.
You're okay with the way you're looking. You wish people could and now you want to put me on the spot.
Do I need gym?
Yeah. I mean, if you can just consider eating healthy, cutting down a few foodstuffs such as junk.
The Midnight Snack, every Monday, 12 to 3 a.m. with Chanduko Ligege. Africa in Business on Channel Africa.
It is 24 minutes after 4 p.m. Central African Time. Now, MultiChoice Group will be delisting from the Johannesburg Stock Exchange on the 10th of December. This is after Canal Plus secured control of more than 90% of its shares, effectively completing its takeover of the African pay TV giant. In a notice to shareholders on Friday, MultiChoice announced that trading of its shares on both the Johannesburg Stock Exchange and A2X will be suspended from the 27th of October, which is today. For more on this, we joined on the line by Viv Govender, Portfolio Manager at Rand Swiss. A very good afternoon to you, Viv. Welcome to Africa in Business.
Thanks for having me.
So, Viv, there will be an immediate market implication for MultiChoice delisting on October the 10th. Can you take us through what those implications might be, as well as what the impact of the suspension of the trading of its shares will be as of today?
Well, I mean, pretty simply, what's happened here is that effectively you're going to be a forced seller of MultiChoice, and that is basically a something that happens, reasonably often in the marketplace, where a party comes along and says this particular company is effectively, something which we think is, undervalued in our stable. It may not be undervalued on its own, but it could be undervalued in our stable. And therefore, if you think you have a better use for that company, and you can basically think the price that it is at is less than that use value to you, you go and buy it, and that is what's going to be happening here. You're effectively going to be, losing access to the ability to buy MultiChoice shares after this particular date.
So what does it actually mean for South African investors who currently hold shares, MultiChoice shares, on the Johannesburg Stock Exchange or even on A2X?
Yeah, like I said, it's effectively as if you're going to be, like I said, forced to get rid of him. The IJ here is basically the majority of people who own MultiChoice shares or own the majority of MultiChoice shares have come out and voted yes. You can basically buy our shares at this particular price, okay? And that's what's going to be happening here. If you are one of the smaller guys who maybe didn't want to sell your shares, you have no choice, because the majority here has come out and said, these shares are now going to be sold at this particular price, which we think is fair to buy the shares at.
So what does this actually mean for investors? Is this an equitable return on their investment in MultiChoice? Would it not have been more beneficial for them to hold on to the shares should they wish, and then have those shares, transformed or transferred into the Canal Plus shares, which are likely to rate higher?
Yeah, but the thing is that generally when you basically are given access to this particular thing, or you're basically having your shares being bought out, a premium is paid. So if you look at the share price, the valuation of MultiChoice, you would find that once the deal was announced, or was becoming likely, what you would find is that the share price went up to the value of the deal. The deal would be more than the current price of the shares. Now, if you really love MultiChoice and wanted to basically, you think that the value that they're giving for you, let's just say they're asking or offering you, like say, 100% more, at least a round number, okay, than the current price of the shares. If you thought it was worth twice as much as what you bought them for, you should have bought twice as many shares. You should have owned more shares. The fact of the matter is the market wasn't valuing those shares at that high price beforehand. next thing is that if you wanted to go basically think that you wanted to have, to list other shares instead, what you would do then is you would take the the value that you were given, and then you would basically be able to, buy the other company if you wanted to, or buy other shares if you wanted to. And that's the thing here. If you are actually, of the belief that you are being, in inverted commas, really done badly by, well, you should have bought more shares. You had something that you thought must have been incredibly undervalued before the deal was announced.
So what does this actually mean, this delisting? How does it affect the broader listing sentiment as well as the investor confidence in African listed media or tech companies?
Well, the thing is that this is one of the bigger trends I think is unnoticed by the general marketplace and regulators as well. Now, if you think about it, right, so you have a pension plan. Most people have pension plans out there. If you look at your pension plan, one of the things that forms the majority of most people's pension plans in South Africa and in much of the world is shares, right? Because the stock market, share market has been such a universal, profitable thing to invest in for the last, several centuries. In fact, that as governments have developed the idea of pensions, of supporting pensions by individuals and so on, they've kind of, built into the idea that you buy these shares as part of your pension. Now, the problem is that if you start seeing significant delistings happening, the available shares that a investor has to buy into for their pension, which is like a government supported thing, goes down. And that makes it, a less of a good deal for these investors. And I do think that's an issue. Of course, multi-choice on its own is not the enough to make this a problem. But if you look at the number of shares that are being delisted in South Africa, and then total number of shares available for investors to invest in, it's actually been decreasing. And when you do have new listings in South Africa, it's not usually going to be, like in the US, for instance, you have Facebook listing, which is a brand new company. Often you have like what's happening with Coca-Cola, where it's already an established company that's splitting off a piece of itself, if you know what I mean, with the Coca-Cola bottling. And I think that is the concern that is going forward. We have built a system for pensions, for how people, save towards retirement. And that system, one of the foundations of it is this large, diverse share market. And if that is not going to be the case going forward, it's going to make a real impact in terms of how people have to adjust for their pensions in the future.
Viv, of late we've seen a rise in the number of companies that are delisting from the JSE, delisting for a myriad number of reasons. How does the trend of delisting reflect on the broader health of South Africa's equity market, as well as its attractiveness to domestic versus foreign investors?
Yeah, look, I mean, it's not just a South African thing, but it is obviously a problem in South Africa. The example I'd give here is that what's happening with AI at the moment, artificial intelligence. And you see a lot of these artificial intelligence companies now have valuations in the hundreds of billions of dollars. OpenAI is $500 billion, $500 billion effectively. XAI for Elon Musk is worth over 100 billion. A couple hundred billion, in fact, Anthropic over a couple hundred billion. And we also are seeing other companies out there as well that are, very important in and would normally historically have been listed ages ago, like SpaceX, for instance, that's the rocket company that Elon Musk has, or Neuralink, another company he has. These companies historically would have been listed. And what we are seeing now is that they are staying in private markets for a lot longer. And the good thing from the point of view of the founder, like for instance, Elon Musk or Sam Altman, is that you retain more control of your company. The bad thing is that historically what happened is these companies would list when they were much less valuable. And then as they became fully mature, normal investors, retail investors would have bought these companies and gotten a huge uptick as they became valuable. Like you bought Amazon, when it's worth a few billion, and now it's worth a few trillion. And that difference would have made you a lot of money over that period of time. The same thing with Google, the same thing with Facebook. But if Facebook, Google, and Amazon had not listed where they did, and in fact kept themselves private until they were worth over $1 trillion or something, a lot of the value that would have got to like retail investors is no longer available. And like I said, you have to understand that the way governments, not just South Africa, but around the world, have built their pension systems is with the idea that you have access to this particular market. And this particular market, historically, like I said, until very recently, did very well and still doing very well. But if you don't have all your or many of your major IPOs listing, major new companies listing, until they are extremely valuable, you are going to change how the returns of these things look like going forward,
Right.
and change how people have to plan for pensions.
Viv Govender, thank you so much for the insight into the delisting of MultiChoice and Canal Plus, then relisting, and also just the general trend of value of shares and the importance of timing as far as listing is concerned, and the acquisition of how many shares you buy versus how much you will get when they eventually sell or when you are forced to sell, which may be the case. Viv Govender, thank you so much for your insight this afternoon. Viv Govender, thank you. That's Viv Govender. He's portfolio manager at Rand Swiss, and it takes us to exactly 4:34 Central African time. Let's head over now to the markets for the latest market indicators. Here is Buntle Headbush.
Business news on Channel Africa. The African perspective.
Thanks, Thami. Good afternoon. In our final look at the indicators this afternoon, one US dollar is trading at 17 Rand 24 in South Africa. In Botswana, it's trading at 13 Pula 71, Namibia 17 Namibian dollars 24. The Zambian kwacha is trading at 22 kwacha and 3. In Kenya, the dollar is trading at 128 shilling 26. In Ethiopia, 150 birr 87, Uganda 3,460 shilling, and in Tanzania it's at 2,488 shilling. 1 US dollar in Nigeria is trading at 1,459 naira this afternoon. In Egypt, the dollar is trading at 47 Egyptian pound 55. In Tunisia, it's trading at 2 dinar 92. Algeria, 129 dinar 43. In Morocco, the dollar will cost you 9 dirham 21. In Angola, it's trading at 912 kwanza, while the Congolese franc is trading at 2,200 to the US dollar. Looking at commodities, gold is trading at $4,008 per ounce this afternoon. It's down from last week's price. And platinum at $1,571 per ounce, also down from last week's highs, while Brent crude oil is at $65.92 a barrel. And those are your indicators. For any business stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business, I am Buntle Headbush.
Business news on Channel Africa. The African perspective.
And standing by for the latest from the business of sport, a very good afternoon to you, Musibudi Makura.
Sports on Channel Africa. The African perspective.
Thank you so much, Thami. Very good afternoon from the sports desk. So the global sports economy is rapidly expanding, with Africa predicted as the fastest growing region in the world. So basketball, for example, the continent has produced for decades show-stopping talent that has frequently gone on to play in the West. Now the NBA is now doubling down on its efforts to grow the game across the continent, with plans to expand its regional league, homegrown talent, as well as start selling more franchises. Now the NBA Commissioner David Silva says he sees a major opportunity to build the sport across the African continent.
Around Africa, for example, I would say that's one continent where they have not experienced the level of sport investment as other places in the world. But on the other hand, I mean, it's just an amazing data point that the UN is estimating in just 25 years from now, 40% of the young people in the world will live in Africa. Right. And so we see as the NBA an amazing opportunity.
Now, Silva says that the league will also soon be selling franchises to its league on the African continent.
Rather than take these existing clubs, that we are going to market with an opportunity to sell 12 franchises, 12 newly minted franchises, with the opportunity to build an arena complex with those franchises. Right. Again, presumably the arena becomes the anchor tenant for that arena.
All right, on more sporting updates now, we can confirm that Yannick Sinner has now reached the $50 million mark in terms of prize money. This follows his win at the Vienna Open that was played on Sunday out in Vienna. He walked away with a $1.2 million from that win and confirming his overall prize money in his career at $50 million, $3.5 million, having played, of course, in the last 5 years as a professional player, and earlier on this year winning the Wimbledon title, where he won about $3.2 million in that event, and then also walking away with a cool $3.5 million this after winning the Australian Open at the start of the year. He joins the likes of his rival from Spain, that is of course Carlos Alcaraz, who became the second man to reach the $50 million mark this year, joining the likes, of course, of Yannick Sinner. 3 other players have reached the $100 million mark when it comes to prize money in tennis. Those include the likes of Novak Djokovic, as well as his other rivals in Rafael Nadal and Roger Federer, all players having crossed the $100 million mark when it comes to prize money in tennis. Well, that concludes your sports news this hour. For any sports stories you'd like to share with us, our email address is newsroom@channelafrica.co.za. Alternatively, give us a call. The newsroom line is +27 11714 4459. For Channel Africa Sport, I am Mosibudi Makura.
Sports on Channel Africa. The African perspective. African enterprise meets global opportunity. Africa in business on Channel Africa.
It is exactly 6:40 p.m. Central African Time. South Africa's President Cyril Ramaphosa says the G20 summit, which is to be held in South Africa in the month of November, will go ahead without disruption. This is even if the US President Donald Trump ultimately does not attend, insisting that the presidency is too far advanced to be affected by individual absences. Ramaphosa was speaking to the media at the end of a 3-day tour of the Southeast Asia Summit on Monday. His comments come as tensions between the two countries continue. Dimakatso Leshuru has the details.
President Cyril Ramaphosa says South Africa's G20 presidency comes as the world grapples with inequality, climate shocks and a fragile global economy. But he says the summit will proceed smoothly regardless of who shows up.
It has been said that President Trump will not be there. I don't know completely. But even if he's not there, the G20 summit will go ahead.
Ramaphosa's comments come amid speculation that US President Donald Trump may skip the gathering following tensions between the two countries, including false allegations by Trump that there was a genocide against white people in South Africa. But the South African leader says work is already underway and consensus among nations is emerging.
We will work very hard. Our Minister of International Relations here, Minister Ronald Lamola, is working very hard as he leads our G20 presidency process to have a declaration arrived at. We've been working extremely hard in all the 130 meetings, and there is an emergence of a consensus.
Ramaphosa stressed that South Africa inherits strong momentum from 3 consecutive G20 presidencies held by Global South nations, Indonesia, India and Brazil, which have repositioned the forum's priorities.
These are all countries that have emerged from years of colonialism and that have been developing their economies, improving their people's lives. And so therefore they have, through their presidency, put on the global agenda key development issues. And I do believe that going forward, it is going to be near impossible to see a reversal of the key issues that have been put on the global agenda.
South Africa will continue pushing for climate finance, global trade fairness and reform of financial institutions, echoing the sentiments of African countries about the unjust cost of debt to developing nations, among other things to be discussed in November.
Many countries in the global south are paying far much more than countries in the global north for their debt. Debt for countries in the north is much cheaper than debt cost for countries in the global south. And we think this is a huge injustice because many countries spend much more of their financial resources financing debt rather than paying for education, for health, and for infrastructure and development. And we do believe that this needs to be addressed.
As preparations intensify ahead of the Leaders' Summit in Johannesburg, Nobel laureate Professor Joseph Stiglitz has been tasked with writing a report on inequality which will be released early next month ahead of the summit. Ramaphosa says South Africa is working towards agreement on a final declaration.
The declaration will be only finalized by the leaders when they meet, where we hope that full consensus or sufficient consensus will have been reached.
On trade, the president says South Africa is deepening partnerships with countries across Asia, including Vietnam and Malaysia, as part of its effort to diversify markets given rising uncertainty in the wake of U.S. trade tariffs.
We are very pleased with the way we were received and the responses that we have also been given in terms of our ambitions to spread our access to the various markets here. And this has obviously been born out of our response, as many countries are responding now, to diversify away from single markets where there's a lot of risk already. If we diversify and deepen our market access with many other countries, we'll be able to have greater economic growth in South Africa.
He says the cooperation could boost investment, student exchanges and defense industries, especially with Malaysia, which he called a rebooted relationship. Ramaphosa addressed global security, saying South Africa remains willing to help mediate in the war between Russia and Ukraine, a continuation of the African Peace Mission launched last year. For Channel Africa News, I'm Dimakatso Leshoro in Johannesburg.
Africa in Business on Channel Africa.
It is exactly 4:46 Central African time. Now, a G20 meeting looking at food loss and waste prevention in sub-Saharan Africa has revealed that approximately 10.3 million tons of edible food in South Africa does not reach the human stomach, making up 34% of all food used in the country. So South Africa hosted the 9th regional workshop on this in Pretoria, South Africa, a strategic session led by the government of Germany, New Zealand, as well as South Africa in the sharing of insights as well as strategies to promote food security and combat waste. SABC News economics reporter Katlego Legodi has that story.
Plans are at an advanced stage for the country's hosting of the G20 Heads of State Summit, and various working groups are putting final touches to their approach to the summit in November. One of them is the agricultural sector that has held various strategic meetings, with the latest at the University of Pretoria, looking at food loss and waste prevention in sub-Saharan Africa. The Council for Scientific and Industrial Research, the CSIR's Professor Suzanne Olofse, shared alarming data on the state of food waste in South Africa.
Our research revealed that approximately 10.3 million tons of edible food annually does not reach the human stomach. That is an astounding 34% of all food produced in South Africa. And if you take into consideration that we export quite a bit of the food that we produce, it comes down to 45% of the food available for consumption in South Africa. And I think that should really have us sit up straight, realizing how inefficient our food systems are.
Food waste is a global issue that leads to an economic cost and environmental harm, with cautions around the impact of agricultural emissions on the planet. New Zealand's ambassador to South Africa, Philip Hewitt, says climate change is challenging nations to rethink their agriculture sustainability strategies.
Globally, the FAO estimates about 1/3 of all food produced, around 1.3 billion tonnes, is lost or wasted each year, contributing up to 10% of global greenhouse gas emissions. Reducing food loss and waste is essential if we are to feed a growing global population, support livelihoods across the agri-food sector, and meet our climate and environmental sustainability commitments.
This session saw the sharing of ideas on the issue in line with the United Nations Sustainable Development Goals. The Department of Agriculture's DDG Kwena Komape says most concerning is how the most vulnerable in the society are negatively affected, looking at the country's G20 bringing change in the lives of South Africans.
You're talking about minimizing the wastage, the spoilage of food, preservation of food, and it's about time that we also own our own production methodologies, even the seeds. It's important that we take control of that. Yes, indeed, when it comes to the economies and I talked about the development of rural areas and the jobs. So that food that ends up in the landfills, it's the food that's supposed to have gone through the agricultural value chain.
With technology fast advancing, the Agricultural Research Council's Dr. Lindam Tuisha spoke on the interface between data, science, and innovation.
Strengthen the science, policy, and society interface, calling for the researchers, government, and industry to fund innovation, to share data, and to shape policies that produce responsible production and consumption of food.
The gathering also saw an update on South Africa's adoption of a G20 Food Security Task Force declaration that the sector has been working on. The delegates in agreement that the G20 summit in the coming month must be clear on, amongst others, the combating of food price volatility and waste, supporting of vulnerable communities for food security, and the leveraging of technology in the reduction of agriculture emissions going into the future. Katlego Logodi, SABC News in Pretoria.
Africa in Business on Channel Africa.
It is exactly 4:51 Central African Time, and in this week's slot with First National Bank, we look at the South African Reserve Bank and what to expect from the rate announcement coming up next month. We'll also delve into this week's producer inflation in South Africa and if there could be another acceleration. For more on this, we're joined by Koketso Mano, FNB Senior Economist. A very good afternoon to you, Koketso. Welcome.
Thank you for having me, Thami. Hello to everyone who's watching.
So before we head into the week to come, we saw inflation coming in at 3.4% last week. Now, the South African Reserve Bank also released their monetary policy review. Is there any indication of what we could expect from the rate announcement coming up next month?
Sure. I think when it comes to inflation and actual inflation, which is the latest numbers that we have, you will see that inflation remains relatively muted and closer to the lower end of the inflation target band. And this is something that we don't expect to change dramatically over the near term. So we still expect inflation to not breach 4%. So from a actual inflation point of view, that is actually supportive to lower interest rate or easing monetary policy. What will be a challenge going into the November meeting is, all the noise that is happening around the change of the inflation target, which the Reserve Bank has explicitly said they would prefer to target 3%. So that means that, you need to guide inflation expectations to start thinking with 3% in mind and planning with 3% in mind, whether it be from a price setting perspective, from us as we go to demand wage increments, we need to start thinking with that in mind. And then there's also another lever that is probably very important in this time around when the Reserve Bank really wants to lower the targets, the de facto target that they work with, right? The last time they did that was 2017, 2018, and they said they would like to target 4.5% to allow them a margin of error. And they didn't really need the Treasury to be on board the last time. But what's different this time is obviously with a 3% target, that is much lower than what we would, experience when you think about administered price inflation. This is electricity, water, and other utilities, right? So you need government to also be on board with that so that we start to see all these price dynamics also starting to trend lower over the longer term, and then allow us to actually achieve a lower inflation target sustainably and without much cost to the household or consumer sector. So that is just something that I think maybe by November we may not have very clear direction as yet, because Treasury did make it explicit that they are trying to do the consultative process, the political consultations. So maybe in January in February next year through the national budget, we might see something, but the market is currently pricing in the first cut in March of next year. We think maybe second half of next year, given how long it takes to drive inflation expectations lower. So maybe not November, Tammy, but inflation cuts are still coming.
So let's get to this week. The producer inflation will be released. What are expectations regarding that, and perhaps another acceleration?
Yeah, likely another acceleration is coming through. We did see an acceleration in the previous month in August. It is speaking to then the easing of positive base effects that have been driving the numbers much lower this year. It's not only a PPI story, but a consumer inflation story as well. But obviously, as we get into the second half, we did warn that inflation numbers are probably going to trickle higher. We're also worried about what's happening in food. If you remember, in the August number, food did drive producer price inflation higher. So with the continued outbreaks of FMD, foot and mouth disease, we might see that those numbers also continuing to show you a little bit of pressure. So we do see another uptick coming through in September.
We'll be also expecting the private sector credit extension data for September to be released. What is it saying about South African businesses?
Yeah, I think the private sector extension data has been showing us a few things. One, the consumer is constrained, and you can see it in the credit uptake, which remains relatively muted, right? Especially when you think about mortgages. The only thing that is really driving consumer uptake of credit is credit cards, which is maybe just the revolving credit type of thing, and also vehicle asset finance. And we see that vehicle asset finance theme also filtering through to the corporate sector rather. So it seems as though there is that replacement cycle that has taken shape. Tammy, if you look at the NAMSA new vehicle sales trade data, you will also see that vehicle sales are doing relatively well. So that has been supporting the theme. But in general, the PSCE, the private sector credit extension data, has been showing us that corporate credit is what has actually been driving the numbers higher. But corporate credit is also showing us general loans and advances. We don't think it's anything structural as yet. It's maybe businesses just trying to stay afloat. So we hope that as the theme or the story around South Africa, the removal of the grey from the grey list, all of these positives around foreign investment into South Africa will support confidence. We don't see it quite yet. So unfortunately, the numbers are not really showing you that structural investment initiative.
Koketso Mano, always a pleasure. Thank you so much for the latest regarding the numbers that have been released and those that we are expecting. Thank you so much for your time this afternoon.
Thank you for having me.
Thank you. That's Koketso Mano. She's the FNB senior economist, taking us to exactly 4:57 Central African time. Well, as we round off this Monday edition of Africa in Business, let's usher in Joelle as she prepares herself for a really important conversation and some important conversations that she'll be having this afternoon on Vue d'Afrique. Bonjour, madame.
Bonjour, Thami. Some important conversation indeed about Cameroon.
Yes.
Paul Biya est le président sortant, mais aussi réélu pour un 8e mandat avec 53,66% des voix. Nous sommes au Cameroun. On en parlera tout à l'heure avec notre correspondant. Bonjour, chers auditeurs. Nous parlerons également de la Côte d'Ivoire. L'un des 5 candidats à la présidentielle de samedi félicite le président sortant, Alassane Ouattara. C'est tout à l'heure. Merci de rester connecté. Merci, Thami.
Merci beaucoup, Joelle. That's how we come to the end of Africa in Business on this Monday. Thank you to our team on the news desk, Onel Nsinzi, economics desk, Bontle Headbush, on sport, Musibudi Makura, and also our production team there, Dumi Selema, our technical producer, as well as our producer, Mabo Boloka. That's how we come to the end of this Monday edition. I am Thami Ngubeni. This has been Africa in Business on Channel Africa. Restez connectés.